All right, guys, so we're on site today right here in Myrtle Beach, South Carolina. I have with me Gosia Cooke, who you well know. We're going to be talking about scaling your real estate portfolio, and there is no one better to ask about this than Gosia Cooke. She does own, we just calculated it up, 24 properties. Obviously, she's diversified. She's not only in oceanfront condos, but she does have four commercial properties?
Two commercial.
Two commercial.
Four in Colorado. They're a mixture of actually short-term and long-term rentals. So we have few out-of-state properties, and here we have 15 short-term rentals, two commercial properties, and three long-term rental properties.
So as you can see, she is well diversified in her portfolio, and she has conquered some of those stages of growth that many of you are going to hit a hard challenge, a hard wall on, and need to figure out how to overcome. So that's why I wanted to have her on today. You'd like to invest in an oceanfront condo at a beach resort. I'd like to show you how they make profit and break down all their expenses so you understand how they operate, how they appreciate over time, and how to choose the right property manager for your goals. I'd also like to let you know what your HOA includes, how the location best services the tourist booking your unit, how your tourist can navigate the area to the best attractions, restaurants, and local events. I'd like to give you a market report on the resort that you're checking out today so that you make savvy investment decisions. And if you stay tuned until the end, I'll show you my top picks for the units that have appreciated the most in our market or generated the most gross rental income. So no matter if you're a first-time investor, a seasoned professional transitioning into the real estate game, or simply a casual investor who wants to buy an oceanfront condo to rent out while you're not using it for vacation. Whether you've got 15% to pay down because you're financing or you're a cash buyer, if it's an oceanfront condo you're after, you'll be better because I'm aiming to give you a 10 times return on your time for watching this video to the end. So let's just jump right into it, Gosia. So what was your biggest mistake when scaling your portfolio, and how much did it cost you?
I'm gonna admit that because I didn't have a lot of knowledge stepping into the business, well, aside from education, as we just discussed in business and accounting, I didn't have much real estate knowledge or experience. We were stepping in slowly, so we were very careful, and we were actually utilizing cash as opposed to financing. So I would say in the beginning, there weren't really that many mistakes that we personally have made. I could see a mistake of being overutilizing financing, but when we were starting in 2009, there was no financing available. If you didn't have cash, you were not buying real estate.
The market crashed in 2008.
Yes, so we were buying at the right time, but we were limited to the funds that we had back then.
Now, talking about buying at the right time, timing the market. For somebody who's buying right now, how do they win?
If they are buying right now, I mean, there is no better time to start than now. If you haven't started already, you got to start at some point.
Yeah.
You can't keep waiting. If you don't risk, there's never going to be reward.
That's absolutely right. Absolutely. So, guys, there's always timing to the market. And if you buy in the right market, though, for example, our market, who had over 90,600 people move here last year, in my opinion, it is positioned to appreciate very, very well over the next 10 to 15 years. Being the fastest growing place out of the 150 most populated places in the entire U.S., again, positions your property to appreciate well, in my opinion. So even if you feel like we're at the top of the market, we are growing. And if we're growing, there's demand here. And if there's demand, then prices increase. It's just that simple. Now, you talked about over leveraging. For somebody who doesn't understand what that means, can you break it down?
It's when you're borrowing more than you can afford. I would say this is the simplest way. Just because there are creative ways of finding that financing doesn't mean that it's a right choice. If you have too many loans, I guess you're over leveraged. That's right. That's the way to say. At some point, any little hiccup on the market, any worse year in rentals than what you're predicting or projecting may put you in a big hole.
How do you avoid that? So if you were in that place and you were leveraged, what kind of, stop gaps, or what kind of, protocols or red flags, like, is there a certain formula that you would follow?
So, like I mentioned earlier, we're very careful investors. So I'm not as risk tolerant as others might be. And I guess those could be the ones that are over leveraged. But I would say for anybody, I don't think there is a golden formula. Just find your risk tolerance, what you're comfortable with. Because in the beginning, we were using cash only. Then we had some properties along the way that were financed. I'm just doing it to the extent where I'm comfortable with. Okay, what if something happens? Can my other properties cover my expenses for that one? And it's just as simple as that. But I just look at, with my personal properties, what I'm comfortable with.
Yeah, absolutely.
If the market is low, if somebody is comfortable with more of, or if they're willing to take higher risk and potentially lose some of those properties when the numbers don't come as close as what you were expecting, then it's but that's the mistake we're trying to tell you to avoid.
Yeah, for sure. Now that's very much a cash flow concept. Can you dive into that and speak to that just a little bit? Obviously, there's a timing to cash flow, and when your portfolio starts to grow, that timing is very, very important. Would you recommend running cash flow analysis on your portfolio? Do you kind of time your monthly payments and your budget? How do you dive into that sort of thing? Because I know you're managing a lot of properties. So, what is your cash flow strategy, as far as timing?
As this time, most of our cash flow bills and everything is automated because of the scale that we're at. So I'm not monitoring it as closely.
Gotcha.
I just check the bank account and I see it is what it needs to be.
Yes.
So I don't need to look further. We have few bookkeepers helping us with my management company, with our real estate investment business. So they're overseeing most of the things. Okay. I'm main one above all of the bookkeepers. I have 3 actually.
Yeah.
In 3 different countries.
I can't wait to dive into that. I'm going to dive into that in a minute.
Anyway, so they are taking care of most of the bookkeeping, and I know more or less what time of year, how much money should be transferred from the trust account to our, business account for that real estate part of the business that we have, the investments. And as long as everything looks how it should at this point in where we are right now, I don't even get into it.
Now, you've said 2 things that I have to ask you questions about. You get me excited when you talk, Gosia. Okay. First, you mentioned a trust. We're going to dive into that in just a minute. You also mentioned that you have multiple bookkeepers. Now, to the common person that doesn't own multiple properties or has never scaled a business, they're probably wondering, well, why would a person need more than one bookkeeper? I believe you should invest in oceanfront condos in Myrtle Beach, South Carolina, because you can enjoy and increase the passive income of your oceanfront condo through the 20 to 22 million tourists that visit the number 2 vacation destination on the East Coast each year. Not only can you enjoy the equity paid for by visiting tourists, but you can also anticipate the over 100% appreciation experience at many of the oceanfront resorts in our market during the recent decade. I believe you should invest in oceanfront condos in Myrtle Beach, South Carolina, because you can depreciate them, reducing your overall tax burden, keeping more money for you and your loved ones, and ensuring unnecessary taxes aren't paid.
When they're accountant. I am an accountant, right? Why do I even need more people to do what I can do myself? Because there are too many properties. You can't scale when you're trying to do everything on your own.
She just hit the nail on the head.
Is that what you were hoping to hear?
Yes.
Yeah.
You cannot scale when you are trying to do everything on your own. So if you have a hope of scaling your business, you are going to need help. Now, at what point along the way did you start adding in these bookkeepers? Like, was it at 5 properties? Was it at 10?
I don't remember how many properties. It was more of how much of my own time it was taking.
Okay.
And I found myself, I don't have enough time for other things. Like, first of all, my family. If it's taking away my time from family, I probably need help. Then if it's taking away my time and focus from the growth of the company, from sourcing more properties, from even how to word it, from even staying focused on my plan, my mission, my goal. If I am, instead of going the direction that I set for myself, I'm sitting here and crunching numbers, doing bookkeeping or doing other tasks, because it's not necessarily bookkeeping that needs to be done, other tasks for my business, then I'm not following the path.
So
and I'm just stuck in one place.
Yeah. So what I'm hearing is, if the motivation for being about your business or being focused on your goal is waning because you are so busy doing your business,
yes,
then that's a red flag to you to go,
Yes.
hey, I'm not in the best seat on the bus. I need to get into the CEO role. I need to get
Yes.
into the owner role instead of working in my business so much. I need to be focused on working on my goals and my dreams. And if I'm working in my business too much, then I'm starting to lose motivation and hunger for the driver's seat.
Absolutely. And it's just basically no time. You're too tired.
Yeah.
To even remember, hey, this is not what the plan was.
Wow.
We need to keep going. We need to get that task out of our plate so that we can have a clear mind, so that we can follow our goals.
So basically, I'm hearing that you can't do two things at once effectively.
Well, it depends.
It depends. Okay.
It depends. But yeah, when it comes to it's a very general statement.
Yeah,
So
I get it.
it's a very general
Obviously,
statement.
there are times that you need to step into your business and knock some things out.
When it comes to real estate, or investing, or what we're talking about, yes, if you're trying to be the person, be the worker, then you're not going to be the growth person. You're not going to be the leader. You're not going to be developing yourself and your business. If you're just stuck working, it's really a lot of work.
Wow.
Once you hit several properties, there are a lot of different things that you have to take care of, that you're not going to have time for anything else.
Okay.
So you can't do both. You can't be growing and working in the business.
Absolutely.
If that's what you were asking.
Absolutely. Okay. So now let's go back to the trust.
Mm-hmm.
Obviously, can you shed some light on the operating structure that you have put in place? So you obviously have a trust. The trust has an account. You have your own personal finances. Your personal finances have an account. What made you use a trust, and how does that function?
So that's another trust I was actually talking about. I was talking about trust account that a management company has to have.
Gotcha.
When they're operating with, when they're accepting clients' money, because as a property management company, I'm actually managing properties. Some of these properties are my own.
Yes.
It so happens. So all of the money from rentals, short-term, long-term, or commercial, go to that trust account.
Okay.
And then the bookkeepers are the ones helping with, reconciling which money goes where to the clients, to me. So that's why, like I said, from trust account, the money that actually belongs to me after the bookkeepers did what they need to do each month goes to my business account, and that's my money here.
Okay.
You were talking about the trust as far as putting your properties in trust. I have that too.
Okay. Yeah.
That's that is not something I did myself. I actually hired an attorney to get that. But yes, not long ago, that was on my plate, on my mind for a long time. But not long ago, we actually restructured all of our business entities, and we put all of our properties in trust.
Okay. And what's the advantage of that?
Why we did that was to avoid probate court in the future, and it's a tax advantage for our children in the future when they inherit. It's just, I guess, tax advantage. It's complicated. It's a lot to it. I don't think we have enough time.
Absolutely,
but this is the right way to do. If you have gathered considerable amount of wealth and you have somebody that you want to leave it to, in the future, definitely tax advantage, and an easier way to pass from one from one owner to the
another,
other,
without
is through
tons
trust.
of inheritance tax.
Yes.
Okay, so we can't dive into that, guys. Now, I have to ask this. Is scaling your business as simple as making the decision to delegate? Because it sounds like to me, you figured out, well, if I keep working on my business, I'm not going to be able to sustain the dream of where I'm going and my goals. I'm too exhausted. I'm too tired. Did you hit a point where you said, okay, that's it. I'm going to start bringing on people. I'm going to start, and you just turned that light switch on and you went into delegate mode, and then your business shifted at that point. Is that kind of how that works?
Mine was slightly different. So when I started gathering properties, I realized I need a property manager to manage the properties, but then somehow it happened that I became that manager. And then once I was managing my properties and other people's properties, that's when I realized we need more help with the management company. So yes, as a property owner, I would say if you do have job, if you're not looking for that to become your job, if you're looking for passive investment, you probably need to hire help. You need to hire somebody to manage your properties. If you want to do it yourself, also make sure that you structure it as a business and you still hire help, because it's just like I did. My business, alongside of my real estate portfolio, my business has grown too. So the one that wasn't planned was the property management business. Was never ever planned, but it's a big and very well ran and prosperous business.
Yeah,
so
for sure.
I'm very happy with it. But most of the business actually runs on its own right now.
Okay. I believe you should invest in oceanfront condos in Myrtle Beach, South Carolina, because this is the fastest growing area out of the 150 most populated areas in the entire United States for the last 3 years in a row, according to U.S. News and World Report. This helps to insulate our market from many of the ups and downs that the rest of our nation's real estate market experiences. This can help you have a more stable rental property. I believe you should invest in oceanfront condos in Myrtle Beach, South Carolina, because they have a tremendous upside when compared to money market accounts and the stock market, due to the appreciation they earn and the potential of higher annual yields through their gross rental income when compared to these other investments. Money market accounts and the stock market don't have the upside of added appreciation. I believe you should invest in oceanfront condos in Myrtle Beach, South Carolina, because while our prices have risen and have held their value, we're also much cheaper than other places like Florida. Where else can you go and find an oceanfront condo for as little as $100,000? If you're getting into the real estate game or expanding your current portfolio, the bang for your buck is sitting right on the Myrtle Beach, South Carolina oceanfront. So, what's one thing that most first-time investors think is a shortcut, but ends up being a trap?
I guess maybe doing everything on your own,
Okay.
Self-managing. Trying to cut corners.
Okay. And so if you had to go back, would you self-manage or would you hire a property manager?
I would hire if I didn't have that business that I have, which manages my properties.
For sure.
I would find somebody to manage my properties
that you could trust.
Yes, absolutely.
For sure. All right, what's the number one reason real estate investors fail to scale beyond 2 to 3 properties? Like when they start hitting that third property, what happens in their world? And why do they stop? Why do they get frustrated? What did you see in your business when you were early on and only had a few properties?
Ours, actually, we started with long-term rentals. In the beginning, we still lived in Colorado, and the properties were in Denver, Colorado. Ours, the first few were actually fairly easy.
Okay.
We had good tenants in place. So the first few, there was very little work, actually, which encouraged us to grow bigger, because we were thinking, oh, this isn't bad. It runs on its own. And then as we added a few more, that's when we realized that it's a lot of work. So I guess if we're talking about the investors that are trying to do everything on their own, maybe a 2 or 3 And it also depends if it's short-term rental or long-term rental.
Because
short-term rental
a lot
is
of
so much
turnover.
more work.
It's a lot more
Yes.
work. Yeah, a lot more work.
You're dealing with your guests much more than a long-term rentals landlord would deal with their tenants.
Absolutely.
If you have a good tenant.
And what she's saying is like, you know, basically if you have a long-term, you're going to put a 12-month contract in place. The tenant's going to be in there. They're most likely going to stay in there even longer. And you're not there for the day-to-day operations of it. They're in the house. They're handling it. For a short-term rental, you're having turnover. It could be as short as 2 days or 3 days. It could be as long as a week or a month or a few months. But the point is that you're having constant turnover, so there's constant people, so there's more room for problems, there's more room for issues. There are some people that are not going to like this and other people that are going to be happy about that, and you've got to handle all of that. So depending upon the type of property that you're running, the type of business that you're running, obviously it can be challenging at 3 properties versus, you know, with long terms, you know, short terms you have 3 properties, you got a lot going on. With long-term rentals, you have, you know, 5 properties and it's smooth sailing.
You don't have to, because like you mentioned with short-term rentals, you have guests. You need to provide service to your guests, customer service. You need to take care of them. Tenants, they live in your property. They don't need you to provide customer service to them. They don't need anything from you. If everything in their property is in operating order, you never hear from them. They pay their rent on time, and it's you really never hear from them, as opposed to your guests. You hear from every single guest. You have to communicate with every single guest, at least to provide access information.
For sure.
Which some of it can be automated. But
absolutely.
But you still have to provide the service to the guests. To the tenants, you don't.
So can we talk about the difference in being a landlord versus being a business owner? You know, a business owner is going to be, you know, establishing infrastructure in their portfolio. A landlord is just managing a property. You know, so like, and I think that a lot of first-time investors are, you know, they think, oh, I'm going to do all this by myself. They probably start out thinking a lot like a landlord does. I'm going to manage a few properties, but they don't so much think like a business owner. They don't think infrastructure, systems, you know. So is there a difference in being a landlord and being a business owner when it comes to the approach of building a portfolio?
It depends on their plans, I guess. If somebody likes the small operation and working everything themselves, that's
fit.
Great for them.
But
if somebody is more business-minded and they're looking, their goals are bigger, they're planning on expanding beyond 3 properties, then definitely they need the systems, they need the infrastructure, they need help, they need people who know how to guide them. You don't always know the direction. I mean,
and we have to hop into that. I'm getting excited. I'm sorry. So obviously, at each level of growth, there's a constraint that is stopping you from getting to the next level, and there is something that you need to be focusing on doing. It could be, you know, 2 or 3 things that are going to really help you get over that hump. And when you're in the thick of it, you don't necessarily see that or are aware of it. So that's where somebody like you who's been there could come right along and say, hey, you know, did you consider this? Or I see that, you know, after I looked over your financial statements, it looks like you're having this kind of problem. You know, and that outside insight can really be the difference in breakthrough for them, whether or not they grow their portfolio or not. And I think that a lot of people, and I could be wrong, and I myself have fallen into this, I definitely struggle with this. I think that people are, you know, they're siloistic in their thinking. They think, well, I can figure it out, I can do it, I can handle it, I can manage it, I got this. And they don't necessarily, because they've not been down the road like you have, they don't necessarily see, oh, wow, I'm not seeing that I'm bottlenecked right here and I can't get past this. And until somebody else comes along and goes, hey, did you see that right there? You're just like in circles, you know, just doing the same thing over and over and over again until somebody points it out.
There's no way out.
There's no way out. So if I'm saying anything, guys, it is, you definitely need to have mentorship in your life. You definitely need to have partners that are holding you accountable and that are giving you solid feedback. You know, a partner is invaluable, in my opinion. I don't know if you can place a dollar value on a person going, hey, did you see that right there? And then it helps you go from, making 5 million to 10 million because they pointed out that one thing that you couldn't see on your own. So, all right, now how did your portfolio performance change when you stopped doing it all yourself and started hiring experts or bookkeepers or building out the infrastructure? What was that like for you?
We've started growing much faster at a higher pace.
Now that's interesting.
Yes.
Because most people think, well, if I keep as much money as possible, I'm going to make as much money as possible, but they're not realizing that rather than delegating all that out and paying for those services is actually going to help you grow quicker.
Yes, absolutely. Like I mentioned earlier, clear mind, not being tired of working and the everyday little tasks of the business, getting that off your plate, off your schedule. It's just, you can't put price on that. You have more time to know what you want to do, to remember your plan, your goals, but you also have energy and you just have time to source the properties, to go out and meet other people. And that's one thing, like I'm going to agree very much with what you just mentioned. And you said you're guilty of it, and I am too. In the beginning, I never asked for help. I try to figure out everything on my own. There are so many like-minded people. There are so many people out there that have more knowledge, more experience. It's just as easy as asking. People love to help, talking and helping about how they've succeeded. It's just amazing. So yes, meeting like-minded people and spending time with people who know more than you think that you do. It's just, you never know what kind of great advice you can get that can be that breakthrough.
That one thing.
Like you said, that one thing to get you out of that circle that you're stuck in.
Yes.
But if you're in there, you're never going to have time to meet those people.
Exactly. And that's the whole point. You're so in the thick of it. You've got tunnel vision on going, I've got to figure out how to do this. I got to figure out about this. I got to handle this. And you are overwhelmed and you are overworked and you are exhausted and you are tired. And it's not going to serve you well for growing your actual business. Bottom line.
I can see people giving up often at that point. Because they just don't think that there is a way out.
Or I can't handle anymore. I'm spending an hour a day or 2 hours a day in addition to my full-time job doing this. There's no way I could bring on any more, and they most likely can't. Not with their systems, not with the relationships in their life, not with they don't have the insight, they don't have the oversight, they don't have the help.
They need to realize. Not until they realize. I need to outsource some things. I need to hire help, and I need to ask people who know, ask for advice, for mentorship.
For sure.
It's all that matters.
For sure. So let's get into capital, debt, and risk management. So now I know that you bought a lot of properties with cash, but you have bought some with leverage. Did you ever use risky leverage or creative financing early on that backfired?
Not at all. No, we were, like I said, and it probably has a lot to do with my aversion to risk. Our financing was through the local banks, not the big ones. I guess maybe it's easier to obtain financing from the small local banks here, but that's where our financing came from. Fortunately, at the time when we were looking for financing, we were well established to where we could get regular financing at a very reasonable rate, because the more creative your financing, the higher your rate is going to be. So in that regard, I don't have that much experience, fortunately. We didn't have to. I had some clients that didn't qualify. But I think you and I have this one friend that's very creative with financing.
Very creative.
So that's where we would send the clients that just didn't qualify somewhere else. So it's always good to have that person in your, as a resource to your clients if they feel like there is no other way for them to obtain financing for whatever reasons or situations that they are in their life. There are options.
Absolutely. So I don't care if you have a low credit score, get in contact with me. We have a friend that we can put you in contact with that can help you out. Now, all that being said, it is not common, in my opinion, and could be wrong, but I think I'm right on this one. It is not common that someone would have the track record that you have of success about picking the right investments, about turning a profit on them, and about not stepping into the pitfalls of taking on too much risk or too much leverage. What's the secret?
I think we were very fortunate with the timing when we started. First of all, 2009 to start investing in real estate. There isn't a better time. I hope that the times like that never happen again, that the market doesn't crash like that. I don't think it will, actually. So, but yes, what happened. We were fortunate to step in at the right time. And everything after that followed. I think we started at the right time. I was careful. I think my background in accounting and business came in handy also. Analyzing all of our business deals ourselves, which, I mean, now having so many, or maybe at a different dollar amount, it would make sense to actually have more advice. But with what we were doing, how we were growing, with my knowledge in accounting, that was sufficient. But having that,
it's your mindset. Your mindset. What you just said, you said, having more, I need more advice. A lot of people think, well, I've made it. You know, I've got a lot. I know this business so well. I've seen I can imagine you probably hear this. I've seen everything that can happen for this kind of business. I know this business in and out, you know. But here you are saying, because I have been in this business so long, because I have acquired so much, I need more advice than when I was first starting.
There is so much that I don't know still. And I'm realizing the longer I'm in a business, I'm realizing how much more there is to learn. There are so many other branches within real estate investing that we haven't even considered yet. That we're looking into. We discussed little bit before, off the record. We talked about some things, but it's something that I can't sit down and figure out on my own.
Absolutely.
We need help for that. We need advice. We need more people who have been there, who have done that, because I really don't have time, energy, and I don't want to make that big of a mistake.
Could you imagine?
Over years, I have learned that you really need to surround yourself with people who know, and they can advise you, and you need to partner with like-minded people.
So, and you just pointed out something that's invaluable. The further that you scale your portfolio and the more wealth that you build, the bigger the mistake that it's like driving a boat that's 20 feet long versus driving the Titanic. The consequences become
sinking either
much higher, guys, when you start to build substantial wealth. That's why people are at these wealth advisement firms. That's why they're searching for the best and most, the right partners, the right people to do life with and work with in business and in investing, because they recognize that now that they've acquired so much, if they take a wrong step, we're talking about not only what's going on in your life, but your kids' life,
absolutely,
their children's life. I mean, we're talking about impacting multiple generations.
I don't want to start over. I don't.
Not at all. Let's talk through, how do you decide which properties to hold long term versus flip or trade up? Like, what's your thought process there?
With us, it depends on the situation and what our next step is. Let's say, just for an example, we had a lot of good producing short-term rental properties. That was at the time when the rental market was high and every property was producing. There were record numbers, but we wanted to buy commercial property. We wanted to start that. And in order for us to make that possible, we needed to do a 1031 exchange. So we had to pick one of so many, and they were all great. So if we didn't have the next goal, we would have kept them all. So in that particular situation, we sold one to move the funds over to the commercial property. If there is no particular situation, or our goals don't require anything to be sold, we would hold if they're producing, providing that they're producing as expected. But sometimes, even if you have all of the properties that are producing as expected, and you have a bigger goal, a bigger picture, a bigger plan where you need in order to make that step possible, because
Okay.
it requires so much more funding that you currently have available, or higher down payment than what you can do without selling the property, then you have to make that decision and just move one to the other.
Now,
So that's with us.
what made you want to get into commercial
Diversifying.
versus buying more short-term rentals?
Diversifying and not keeping all of our apples in one basket. Just because the numbers were record high, I kind of knew it cannot continue this way.
Yes.
We're having 1, 2, 3 great years. This is gonna be over, and I don't know if I can say
you can say it.
It is over.
Yeah. So
those record years I don't think they will be duplicated. We're having a good year this year.
Yep.
Our properties are doing great, but they're not doing as well as 2022.
Of course. And post-COVID, guys, there's just no way around it. Everybody was in the house. They wanted to get out. Yes. Vacation was on everybody's mind. They wanted to live some life. People had spent some time inside, and they were starting to think things through and going, I'm not having enough life.
Yes.
And they started
being
spending.
able to work remotely too. That made it possible for a lot of people who were traveling. Right now, a lot of companies brought their people back to the office.
Yeah. Oh, yeah. Absolutely. There's a shift going on. Okay. So do you think that, diversification one, do you think that commercial properties are more, they're less work and still as profitable as short-term vacation rentals?
So we don't know that yet for a fact. We only have 2.
Yeah.
But it seems like you're dealing with a business owner.
Yeah.
You're building that relationship with your tenant.
Yep.
But it's, you're renting to a business. They're most often successful, educated people. They're going to be more trustworthy and reliable to pay your rent on time than just dealing with any guests.
Yeah. So
not that guests are bad. I love our guests here in Myrtle Beach.
For sure.
But for a change, it's just a different, different person, different client that you're dealing with.
Yeah.
Like you have businesses, and I like working with businesses. We have at one of our commercial properties, we have a nonprofit renting from us.
That's awesome.
They're fun that they're not even a business; they're a nonprofit organization. Great cause. So that feels good to have somebody like that is renting from us. But also, we don't have to worry about rent being paid because they have funding for their for their cause.
So if we could put it in simple terms, a commercial property is a lot like a long-term rental property.
But better.
But it makes more money. And you're building relationships for the future. And the tenant is in your opinion, and in your experience, they're more trustworthy and they're easier to work with.
Yes, I think so.
I mean, guys, you just said it. I mean, it doesn't really get much more clear than that. So if you are in the short-term rental game and you want to find a more profitable place that you can put your money with less hassles, it sounds to me like commercial properties is where that's going to be. Now, I'm excited about that. I was working on a commercial deal last night. I enjoy doing commercial. Commercial is a lot of fun. If you do want to know where the best deals are in our market on multifamily or hotels or office space, call me, 843-360-1737. Now, at what point did you realize that scaling wasn't just about buying more, but optimizing operations and any debt?
Can you rephrase that?
Yeah.
I want to make sure before I start answering that I understand that correctly.
Yeah. So at what point did you realize that scaling wasn't just about buying more? Because many people think scaling is, well, I'm going to buy more and more properties and this is going to be great and it's going to get big. But really about optimizing operations and debt. Scaling is about building infrastructure. People see more properties. They don't see infrastructure. Infrastructure is what sustains and holds up more properties. It's all those systems and technologies and people that you're leveraging in order to be able to manage it. So once I saw my equity stuck in underperforming units
Mhm.
I realized I needed a CFO mindset, not a landlord mindset.
Mhm.
So again, we're going back to that, that landlord versus business mindset. So
Picking the right
when did you start
properties.
optimizing? Like at what point? Did you have 5 properties? Did you have 10 properties? When did you start optimizing and going, you know what? I'm not going to buy another property. I'm going to stop for 6 months to a year, and I'm going to figure out how to get the right systems and the right people in place so that way we're doing this well.
I think that was when I realized that I'm running property management business.
Okay.
That's when we had enough properties, managed some of our own, and then few for the clients already. When I realized that I needed systems and infrastructure to even continue growing at all, I wouldn't be able to grow at all with realizing that not more properties is not always more important than actually, I would say, better properties.
That's well
That's
said.
what I realized. Just buying a lot of cheap properties where you can maybe barely break even or have a little bit of cash flow and be worried about that rent being paid every month, because in bad properties you're gonna have uh, I don't want to say poorer tenants, but that really is what it is, that they pay less, but for them it's a lot, and it's just, it's hardworking people still, but it's hard for them to function from month to month, so that you don't know if that rent's going to be paid every month.
It's
You
risky.
have more hassle. Or if you have short-term rental properties in questionable areas, or the cheapest ones on the market, I would say, where your lowest paying guests are coming.
Come on.
You don't know, like you might have a property that's booked a lot because it's very cheap, but
Yeah.
you're going to be dealing with problem guests.
No doubt.
You're going to be dealing with a lot of damages. You're going to be dealing with a lot of refunds.
Absolutely.
So after all this work that you've put in, after all these refunds, you may not even be making money.
I try to tell clients this.
Quality.
Yeah.
It really is. You can have one very well producing property as opposed to somebody else's too, and still make more money.
Make more money, have less hassle, have less risk. And I say this to clients all the time. I'm like, you can buy at a low tier resort and it's going to be cheap, or you can buy at a higher tier with a higher HOA that's got a good brand. It's actually there's going to be less risk if you purchase in a higher tier resort than if you purchased in a lower tier. And people think on the surface, they go, well, I'm going to just learn this game. I'm going to put my toes in the water. And if I spend a little bit of money, I'm not going to take on that much risk. Well, technically, because you're buying in the low end of the market, number one, you have all of the guest issues and operational issues that Gosia just mentioned. Additionally, those properties don't appreciate very well. A cheap property might appreciate in 10 years $50,000, as where a 3-bedroom or 4-bedroom will appreciate $300,000 or more. So you're not going to really make any great money on the investment if you buy it in the small end of the business. Additionally, whether you're learning how to run the business on a 1-bedroom or a 4-bedroom, it's the same physics. It's the same stuff you're doing. You just don't have as much margin in appreciation, and you have more hassle with guests and more risk and more loss on the low end than you do on the high end. Plus, the higher end condos generate more profit. They're more profitable. They're also in a much smaller supply than a smaller condo. There's thousands of efficiencies, 1-bedrooms and 2-bedrooms on the market. 3s, 4s, and 5s are in short supply in comparison. So because you are buying a smaller oceanfront condo, you are putting yourself in the fiercest fight over those rentals. And the rentals you're getting are going to be a hassle and a problem.
Yes.
I try to say this all the time.
Probably that investor will probably not buy another one.
Exactly.
After what they experience.
Yes.
And at the end of the day, when they've had enough, they're going to have a hard time selling that property.
Now, speaking of that, I've got a client right now that I feel bad for him. He bought a property at the Sea Mist. He paid $98,000 for it. He is selling the property right now for $43,000.
Oh my gosh! And probably nobody wants to buy it.
And he thinks that oceanfront condos don't make money right now. I'm preaching to him and talking to him, and I'm working him through it. Like, dude, You just didn't make this wasn't a smart investment. It's, you know, and I'm walking them through everything. I'm walking you guys through. The point is, you can buy an ocean view condo at the Sea Mist for 50 grand. It is not the smartest investment in our markets.
It is.
It is not.
Buying a big problem. We don't manage it there. Have I ever?
Yeah, you told me. You told me.
I was gifted. I didn't even have to pay for them. Somebody gave me 30 properties to manage, and half of them were in Sea Mist. And I've never managed in that building before, so I was thinking, how bad can it be?
Yeah, yeah.
Those properties were taking more time than 100 other properties we managed. We had, in a few months that we managed in that building, we had more problems that we had all the years that we've been in management business, and the problems that never happened. Not only more problems in a short period of time, but the types of problems and situations that we had never experienced
and
before.
You don't ever want to do it again.
I gave notice to all my clients. Many of them listed their properties right away when they realized I don't want to manage in there. Many just didn't know. Many out of town, out of state investors that bought sight unseen, they were convinced to those properties. They just didn't know how bad it was. And it's very sad, but it happens often. But the ones that could sell sold. Some kept their properties. I wish them the best. I hope they're doing well. I don't want my company's name in that building.
I completely understand. Mm-hmm. And so people call all the time, hey, you know, I want to, you know, they're thinking I'm going to buy 10 of these properties for $50,000 mm-hmm. each. And this is diversified and I've got mm-hmm. a lot. So mm-hmm. it's a smart move. It is not a smart move. We can't mm-hmm. dwell on it. I cannot tell you enough. If you mm-hmm. want to have a conversation with me, call me 843-360-1737. Let's talk about control versus delegation. Now, what control did you have to give up to grow, and what did you gain in return?
What control? All the control.
I know.
I like having control over a lot of things. Everybody thinks that they can do everything better than other people, but you can't grow when you do everything yourself. So I've been slowly delegating all of the aspects, customer service, all of the operating, overseeing housekeeping, overseeing maintenance, overseeing customer service, all of that in property management business. The last one that I actually outsourced was accounting. For the longest time, I did most of the accounting myself, but then from 1 to 2 to 3 bookkeepers as we were growing, that help that they're providing, I can't put a price on it.
It's invaluable. It gives you your sanity mm-hmm. back, gives you your life back.
Mm-hmm, yes, to venture into other fields.
Yeah, for sure.
Gives me time to do what I want to do.
So you got your life back in return mm-hmm. for delegating.
Mm-hmm. Yes.
Now, why do you think so many investors hold themselves back by refusing to delegate property management and or asset strategy? Now, I want to kind of lay this out.
Mm-hmm.
Let's as we answer this question, let's dive into the differences between asset strategy and property management. Mm-hmm. Asset strategy, we're talking about a financial analysis of the property. We're talking about a reinvestment strategy. Mm-hmm. We're talking about when to do cash out refis on the mm-hmm. property and buy more properties. You know, we're talking, it's very, very much, it's an investment, it's an investment advisory service, mm-hmm. right? Mm-hmm. That's asset strategy. You know, what are the tax write-offs I'm getting on this property? Mm-hmm. Do I need to buy a new property this year? Mm-hmm. There's tons of things we could say about this. Mm-hmm. Now, the property management in large part is the day-to-day operations of mm-hmm. that property.
Yes.
Yeah. So, and which is obviously not the same thing as mm-hmm. asset strategy.
Absolutely.
Yeah. Now, I would assume that obviously you cover the property management basis, but mm-hmm. do you have an asset strategy advisor? Do you work with somebody that
Actually, we do not.
Get out.
We do not. Yes. And like I said, the more we're growing, the more I feel like I could use the help of such person.
For sure.
because it is time consuming to try to, figure out everything on your own
Yeah.
at a certain level when you're getting to a level that you really don't know anything about.
Yeah.
It's the terms that you just mentioned. I can't even repeat a lot of
Come on now.
It's just yes, we need something like that.
Yeah, for sure.
But we don't have an advisor yet. We have been open to the idea. So we have actually, we receive at where we live, we receive a lot of flyers.
No doubt.
The dinner invitations. So we've been going to some. So that's something we're actually talking about and considering at this time in our lives, in our, investing stage. That might be, and the next step might be just outsourcing that too.
Mm-hmm. Yeah. So why do you think so many investors hold themselves back by refusing to let go of that property management or that asset strategy? Like, why do you think they do that?
I would say one is the saving.
Is it ego?
Trying to save money, and yes, thinking that you can do everything better than anybody else. I would say saving.
Do you think that they confuse control with ownership?
Wanting to control everything. I would see that.
Yeah.
I can agree.
And that real freedom is going to come when they implement systems and leverage, like when they get the right people around them, when they put the right systems in place. So obviously, guys, there's a dynamic, in your internal world that you have to start to work through with, and you have to ask yourself, what am I controlling? What am I owning? What's owning me? Versus what am I managing and delegating? And that kind of shift has to take place inside of you internally so that outside of you, everything that you are responsible for gets stewarded well. And you have to start to ask yourself, like, at some point, it's poor stewardship that you're still operating under a control mindset versus I'm owning these properties or this portfolio is owning me. So at some point you go, well, now I'm holding back my portfolio because my stewardship over this is more focused on the control aspect that's satisfying myself versus the ownership aspect, which is I'm delegating, I'm bringing the right people in, I'm managing this well, and I'm treating, you almost, and you probably will agree with me on this, you almost have to treat your business, you have to treat your portfolio, you have to treat it like another person. And at some point, you are the caretaker of this entity.
Yes.
And you know what I mean? And so at some point, if you put it in those terms, it becomes easy to see, oh, am I neglecting this or am I not managing this well because this is satisfying some sort of control, this some kind of ego, or I'm operating in fear here. So it's really holding me back from treating this as well as it could be treating, from helping it break through and get cross over the constraints that it really, really needs. So again, that's a lot of internal work that's going to start inside of you, but the fruit of it is outside of you, your portfolio starts to grow when you make those shifts.
Yes.
Yeah. So
I get it now.
Yeah. So do you think that, just in your own experience, do you think that's a very real thing that people have to work through?
I think at some point when they reach certain level in their real estate portfolio, it would really make sense to outsource that aspect. Also, I see also, aside from ego, maybe being attached personally to the properties.
Oh, no doubt.
Like when you made that
sentimental.
Yes, when you made that comparison to like another person, I'm like, this is our baby.
This is our baby.
Where the baby's growing, but then at some point, it's time to let the baby go.
And you've got to recognize and like
But that's how I can see that being personal. It might be personal and hard to make some difficult business decisions. Let's say it's time to get rid of underperforming property. Well, I like that property.
Yeah.
I liked staying there. Yep. So I don't want to get rid of it, but it's not making money, tells you your advisor. And I'm like, but I like it. So maybe if the advisor makes that decision,
that's right.
Then the portfolio's growing. We're not making these mistakes, as opposed to me making my personal sentimental decisions. There may not always be the right decisions.
All day long. I mean, I love it. I absolutely love it. I'm all for the advisory role. There's just, I heard somebody say that accountability is what separates the leaders from the rest of the pack.
Mm-hmm.
And that's what you get with advisory services, with a fresh pair of eyes, with somebody that's outside of your current portfolio and business. They come in, they say a handful of things, and your eyes just pop open. You're like, I can't believe I wasn't realizing that.
Mm-hmm.
But you can't get it outside of having that relationship intact. It is invaluable. Now, so let's jump into some hard truths.
Mm-hmm.
What's your response to investors who say, why pay an advisory firm 1% to 2% when I can just do it myself?
I'm not sure what to say to that. I don't use advisor.
I
I don't know
know.
if I can. Yeah.
But so in your own shoes,
Uh-huh.
if somebody came to you and was like,
Is it really only 1% to 2%?
asset management,
That's,
yeah.
oh,
Asset, yeah. Now
Mhm.
there are a handful of other fees for
Mhm.
sure. There's
Mhm.
something called a promote carry. So for
Mhm.
example, they will guarantee you, let's just hypothetically,
because
right?
if it's just 1% or 2%, it really makes no sense to be doing it yourself.
by yourself, yeah. But I mean,
Uh-huh.
there are a handful of other fees
Uh-huh.
that go into it. Let's say that you went in on a deal together and
Mhm.
you got your capital back plus an 8% preferred or return. Well, in addition to that, everything over that return, there's a new split. It could be 70-30 to you and to the
Mhm.
advisor. So it kind of
Mhm.
incentivizes the advisor to make sure that they're making things perform well.
Mhm.
And additionally, there's acquisition fees, there's disposition fees. When you sell, when you buy,
Mhm.
there's a asset management fee,
Mhm.
1% to 2% of the gross income of the portfolio,
Mhm.
for them to look over it and constantly figure out, all right, well, this property we need to do this, this, and this, and this property we need to do this, this, and this.
Mhm.
And of course, it's got to cover also, their fees have to cover them being able to check in with you once a quarter. I mean, there's a
Mhm.
whole lot of things that go
Okay.
into it. Yeah. But side note,
Mhm.
so it's not so much, again, it's not so much hand holding. The advisory role is not so much hand holding. The advisory role is really about that business mindset and the growth mindset, and it's about making sure that you avoid serious pitfalls that most of the time we're not capable of seeing ourselves. So, if somebody came alongside you and said, hey, I'm offering you these services, I'm going to help you, blah, 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 blah. We'll set these goals. We'll check in each quarter. We'll make sure that we're hitting our goals. I'll help you plan out your capital events, when to refinance, when to this, blah, 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 blah. How valuable would that be for you? And what would be one of your initial, because I would imagine for you, the response would be very similar to a lot of the other people that are watching. What is the initial roadblock in yourself?
To starting a service like that?
Yeah.
Maybe realizing the need for it and finding the value.
Yeah.
If somebody doesn't see the value in a service provided,
yeah,
then they don't think they need it.
For
so
sure.
As we grow more, and as we know what we do, our business, our goals, as we know more, that I'm talking about me personally, my household, my family, as our investments have grown, I'm realizing more that there is a value in having a service like that.
Yeah,
so
and
maybe a lot of people don't find value.
That's it. That's totally it. Until you hit a certain stage of success, it's hard to see value in. But obviously, you're at a point now where you're going, oh wow, and that might be pretty beneficial.
Yes.
Yeah. So, all right. Now, do you believe that most do-it-yourself investors who try to scale end up burning out or leaving money on the table? So these are two great topics I want to dive into with you. Burning out. Have you burned out?
I guess not.
This woman is Superwoman here.
I get my ups and downs. I'm not gonna lie.
We all do, yeah.
I'm not saying it's always been great. There are times when something happens that makes you wonder, why am I even doing it? Do I really need it? But then you overcome the situation. You overcome that block on the road, and then you have time when everything goes smoothly, and you're thinking, oh, that's great. What are we doing next? You get that motivation.
You get excited again. Yeah.
Or when you're meeting like-minded people who motivate you, that's when you feel there is so much more I can do. Or on the opposite, if you're meeting that person that's just always unhappy and they can just make you realize, I need new friends. I need new friends, or just make you so depressed and get the energy out of you that you don't even want to,
Dude.
continue with your
Yes,
own business.
for sure.
So, but I would say over years we have had, like I said, ups and downs, but it wasn't enough to pull us from that road. I think it's the right path that we're on. I believe strongly in real estate investing as a way of building, wealth of growing. I have not thought or found any other better way of being where we are today.
I say that to people all the time.
So it's still, I still strongly believe in it. Didn't burn out, maybe because I have other things going on in life.
Yeah.
I would say because it is not my full-time job in which I'm constantly in, and it's not overworking me and not overwhelming me to the point where I just want to out and not even run any business at all. So that's why I'm still in, because it's not my full-time job.
In large part because you've built infrastructure, systems, and people. You've got the right kind of leverage.
Yes.
So what she's saying, what I'm hearing is, ultimately, the next phase of your growth is going to be found in what you can take off of your plate rather than bringing more on your plate.
Yes.
Oh, man, that's so good. So now, leaving money on the table. Do you think that investors are leaving money on the table? Were you ever leaving money on the table? Like you mentioned the one property you're sentimental about. In my opinion, you're leaving money on the table.
I was just giving an example.
Actually. Yeah. Okay.
That was an example of where I could see advisor being handy. I am more business minded than emotional. So with me, it wouldn't be me, but I can see. I'm my mind is struck. My brain is wired slightly differently than most of the people. And like I said, I'm more business minded. I am a different person. I'm not your usual investor or your usual client, but that's what I imagine would be like. A lot of people could make sentimental decisions based on emotions. For me, it's very easy to remove the
I want to see the
emotions
numbers
out of the business.
I want to see how those numbers
make
work.
Sense. We need to do something
now,
about it.
Speaking of that, and I think you might enjoy this. I will do risk analysis on an investment. Do you ever dabble into any of that, where you're actually putting a numbered amount for the probability of risk and multiplying it out to kind of find out what's the true value of this investment when I look at it from a risk perspective? So like, for example, if there is if there's a 20%, like you can buy a low end property, you can buy a high end property, right? Well, the low end property in a low tier place is going to have a lot more risk than a high end property, right?
Absolutely.
Well, you can put factors to the probability of risk. 8 times out of 10, I'm going to get a complaint about this low end property, or 5 times out of 10. There's a 50% chance that that I'm going to get bad reviews on this property, that I'm going to get fraudulent, people doing fraudulent claims,
transactions.
Or they're going to try to say that I didn't give a good service and get their money back. So I can put risk factors to those and kind of really see what the true value of that property is versus the true value of a property that might not have as high risk factors. Do you ever do anything like that?
No, it does sound very complicated and very time consuming.
It's not. It's real simple.
I kind of already know that.
Gotcha.
So I don't have to sit down
with numbers
and put numbers to it.
Yeah.
We've worked through it. I know. I don't know the exact percentage or exact number. I don't do analysis like that. I just know our buildings here in town. We've worked in many of them. I know which building we have more problems in. So I guess we already know that. We don't need to analyze that.
You've done that through experience.
But when you have a new client who is new to the market, I can see, and they're hesitating. They're not sure what to do. They're talking to a lot of people who don't have your knowledge and experience, and a lot of those people are giving quite the opposite advice. That's when putting these things on a paper, numbers, and making points and comparing side by side, that's when it can make a lot of sense
for sure.
to hopefully for that person to make a good decision.
And let's just talk to that real quick. And that happens a lot. People will go and ask advice of all kinds of people before they make a decision, right? I was just on the phone with a client. She's coming into town soon. Sweet lady. But she was like, well, I was talking to my sister's friend, and my sister's friend has bought oceanfront condos, and she was saying this, this, and this, and it was all bad stuff, And I'm like, well, and at some point, it might have been that conversation. It might have been a different conversation. But I told somebody, I was like, well, if you ask Gosia Cooke, she'll probably have a different response than your sister's friend. Or if you ask Matt Freeze, or if you ask Rufy Nigro,
who manages her property? She needs a new manager.
Yes, exactly.
Everything is bad.
Yeah, the point is, guys, that if the people in your social circle, you got to be careful who you accept advice from when you're making a major life decision, and how you're going to treat something and handle something and manage something it can be very different than how somebody else does it. And you could have a very, very different experience. So having the right person in your ear at the right time is invaluable to investing. Hands down. Anyways, is passive real estate investing really a myth once you own more than 3 units?
All of my clients' properties, all of their real estate investments that my company manages are passive investments. They do nothing.
So they could own 15 properties, and so long as you're managing it, they don't have to do anything.
I have the one person that owns the most properties that we manage has 9.
Okay.
And we do everything.
You check in with them every once in a while?
I don't even. I mean, why? I mean,
that's great. I get it.
Times actually when my team members reach out to him is if there is a problem or situation that's going to cost more than amount of money that we're authorized to spend by our management agreement. So that's when he hears from us. But he is, he's a not even retired person. He's from another country. He lives here with his wife. He's got family. He's got grandkids. He's got some little business that he runs still remotely from outside, from his country. He's a busy person. He's got life to live. He trusted us with the properties. We're just making it as easy for him as possible. There is no need to know that you need a new fork in your property.
Do you hear this, guys?
Right?
There you go. You can scale a portfolio with Gosia Cooke right now. All right. What's something you did to protect your wealth that 95% of amateur investors never think of? Entity structuring, cost segregation. A lot of investors never invest with the exit strategy in mind. How long I'm going to stay in this property. And this is something that an advisory person comes in and does. They go, okay, well, our plan is this. We're going to buy this property now. We're going to hold it for 5 to 7 years. When the market takes a rise, we're going to exit the property. Then we're going to buy 2 more because we should clear $300,000 in appreciation. And by that, we can pay down on 2 more properties and blah, 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 blah. An advisory person comes alongside you and does that for you, right? I'm assuming you did those kinds of things.
Yes.
So what is something that you did to protect your wealth that 95% of amateur investors never think of, whether it's entity structuring, whether it's cost segregation studies? I just had a client, you'll probably really enjoy this, Yvonne, wonderful client. She bought a 4-bedroom, 3-bathroom over at the Ocean Reef. She did a remodel on it, had it off the market 2.5 months. In her first year, she made $140,000. She cleared $30,000 profit. She did a cost segregation study on it. She got a tax refund of $34,000.
Tax segregation on the remodel she did?
On the
property.
On the property, yeah. So, those are things that amateur investors don't think about doing, that they could be leveraging, that could actually put money in their pockets. What are the things that you did that a lot of amateur investors don't do?
I guess entity not putting properties, and we didn't know in the beginning. We were the amateur investors, so let's not forget
where we came from.
That so we put our properties, to mitigate the liability or reduce the liability, personal liability. We were putting our properties under LLCs. At some point, we changed from LLC to an S corp for tax purposes. And then, like I said, recently we put our properties in trust. So I would say that that's the thing that we've been doing.
Okay,
Mm-hmm.
so if you had to do it again, would you do it by yourself, or would you bring on an advisory firm to help you scale it and build it
From
ground up?
ground up,
Yeah.
probably would look for help sooner than I really did. Yes. Mm-hmm.
So you recognize the value of having that level of input every step along the way.
Right now, I do.
Yeah, for sure. But at first, but when you're there, you don't think like that. Yeah.
It's unfortunate. We can, we can be here. We can tell people what we know from our experience, from the mistakes that we've done. So hopefully they listen.
Yes. Now, guys,
that's the help and advice that I didn't have when I was starting.
No doubt.
There weren't so many resources as easy as just looking up YouTube videos, and there wasn't so much valuable information out there that there is right now.
Yeah, for sure. Mm-hmm. So, guys, you always choose insight over income. There is no way around it. It is the truth. It is the play. It is how you get ahead. A lot of people, when they're first starting out, they will go, well, I don't know how to do this. Mm-hmm. I need help. Mm-hmm. Then they'll get into it. They'll start doing it because they're listening, and they'll get the help that they need. Then they'll be a little bit successful with it. They've got money coming in, and then their value shifts from, I don't need help anymore. I don't need insight anymore. I need more money. Mm-hmm. And then their value shifts from, I need help, I'm listening, to, I need to chase more money, because if I get more money, that'll be great. And that's what I really, really want. They didn't recognize that the reason why they got money in the first place was because they didn't know what they were doing, and they chose to listen to people that did. And that's what brought the money.
Mm-hmm. Yes.
Now, at whatever point in this journey you stop listening and insight stops being the priority, that's where you level off. Mm-hmm. So you set your cap mm-hmm. at how far you can get in life whenever you know it all. As soon as you know it all, or as soon as the value shifts to, I need more money, not more insight, you've just set where you're going to level off at. It could be 3 properties, it could be 6 properties, it could be 15 properties, it could be 3 businesses that you're scaling or growing. No matter where it is, you always have to choose insight over income. And here's the catch. The further that you get in this game, the more money you make, the more the insight is going to cost you. Mm-hmm. Because think about it. I'm not going to come along. This is just me, mm-hmm. me hypothetically, right? Mm-hmm. I'm not going to come alongside Gosia and go, listen, Gosia, here's how you can make $20 million.
Oh.
and say, well, you can just have it all. I don't really want anything. Mm-hmm. I just give me $5,000. Mm-hmm. I'm not going to come alongside Gosia and give away the beans on how she can move her portfolio from 10 million to 20 million without getting paid. It's going to cost her something to get that. If she has the value of insight over income, she will go, okay, I will pay for that. And then she will move on to the next level. It's that simple and that easy. So we always have to choose insight over income. There is no way around it. It is the value that is going to move us ahead in life. And as soon as you stop choosing, as soon as that value shifts, you choose where you level off in life. It's that simple. When you stop being a learner and stop listening, you stop growing. I can't say it enough. Now, all right. So, and you being on the back end of this thing, obviously you see pretty clearly that, you could build from the ground up with having the right level of insight at every stage. Obviously, it would have helped her tremendously. It would have cut back on how much losses of profit. It would have cut back on losses of time. It would have given her more peace of mind. It would have, I
would be curious if we were able to go back in time and have another me side by side next to the path I was going with the path that you're suggesting, where each one of us would be today. Wouldn't a tool like that be amazing that it could show us?
Yeah. And so, and I'm going to say this to you. I'm going to say this to you. Ultimately, it hurts to win a lot of the times in life. You know, there's a proverb that says something like wisdom is like an earring. And ultimately, you know, an earring is beautiful to wear. Everybody sees it and goes, oh, wow, that's really, really awesome. That's a beautiful earring. It's a piece of jewelry. It's flashy. It's catchy. It looks beautiful. People are attracted to it. They want it. But they don't see that it took you getting a hole in your ear to get it. They don't see the pain. They just see the beauty. So the point is that wisdom is very much like an earring. It's going to hurt when you abide by it. You're going to have to, you know, part of you is going to have to die in order to get to that wisdom, you know. And so, you know, in order to be able to listen or hear the advice, it is going to cost you something, and that is going to be uncomfortable, but it will prosper you in the end. The discipline that you accept now is going to yield fruit and a harvest, and you will be thankful on the other side. And all the other people are looking at your life and they're going, oh, wow, that looks so beautiful. That earring, that wisdom that you're following looks so great. Wow, I wish I had something like that. Well, you've got to pay the price. And there is a price for it. It is that simple and that easy. Now, all right, so and the hard part is getting people that are like you 20 years ago, getting people at the starting stage of this to actually listen and go and recognize, this is what you got to recognize. If you have a value for insight over income, which that's another word for wisdom, if you have a value for wisdom, it's going to be shown in what you're willing to pay for it. It's that simple and that easy. If you're not willing, you can say all day, I want to be wise. I want to understand something. I want to learn. I want to grow. But if you don't actually back it up with a price that you're willing to pay for it, then it's only a theory in your head. It is not something that is practically worked out in your life. And there is a cost to wisdom. It's not free. Now, I'm sorry. I'm on a soapbox. I need to stop. I'm living this and I'm learning this. And the more that I learn it, the more invaluable I see it is.
I can relate to it from sports perspective. My middle son, he's a swimmer. So when you look at this athlete and their gold medal, that's all you see.
That's all you
see. You see the reward. You don't see the years of sacrifices, hard work, missed birthday parties, not eating like everybody else is eating because, you know, everything matters. You have to be very disciplined and super focused.
Yep, absolutely.
But people don't see that. They just see that end result. Oh, he's so good.
Yep.
Well, he worked hard.
He worked hard and it cost him a lot.
Hard. He sacrificed, just like you said. There is, there's going to be years of learning, years of gaining expertise, gaining experience.
Hard
work, yes.
Yep. Early mornings and late nights. Now, what did scaling your portfolio cost you in your personal life, and how would you do it differently now?
I would say time with family.
Yeah.
We were growing our family or we were starting a family as we were growing our portfolio right around at the same time. So before all the systems were in place, when we were doing more on our own than we are right now, I think the family time was the sacrifice.
It's tough. It is
tough.
Yeah, it's
I
tough.
can take it
because
back.
At the same token, it's a dynamic that you've got to. It's a dance that you have to do. It's like a choreograph. It's like a choreographed dance. There are specific moves at specific times, and you have to hit it just right, right? And the dynamic I'm talking about is you have to keep living your life and growing your dream and walking in your calling. Simultaneously, you have to give care and be present for your family and be a part and build them up and encourage them and get them and prepare them for where they're going in life, right? If you choose to just put yourself on the back burner, then where are you leading your kids? Because they're going to hit a stage in life where they're looking to you and they're going to recognize, oh, mom and dad can't help me here. They don't have the expertise. They didn't make it this far. Yeah.
I mean, they're also watching as they're growing. They're watching us as business people. They're watching our work ethics. They're watching our sacrifices, our dedication. They're learning actually about real estate from hearing what's being talked about. So that's all a plus, and that's great for them. They're growing with a business mindset, with leadership mindset. They're growing in a successful family, so they're going to be successful people. So that's definitely a positive.
Yeah, for sure.
In all that, but maybe having more time along the way
For those one-on-one
together,
moments.
would have been good. But yeah, they're very smart kids, and they're picking up very quickly.
So you've got the responsibility to model success and to grow in your calling and what you're building and doing. At the same token, you've got the responsibility to be present and pour life into them. And so that's a dance that is like, it's like a choreographed dance. You have to hit the moves and the timing just right, because you know, everything being equal is a myth. You know, obviously you've learned by now, when I go deep on this topic, I do really, really well. When I spend a lot of focus and energy on one thing, I do well. When I don't, and I'm divided in my focus, I don't do so well. So you got to figure out how to counterbalance that time with family. I'm going to go real hard on business for the first quarter of the year. Then I'm going to make sure I go real hard on family or whatnot. And you got to figure out what that dance and what that balance looks like for you. And obviously, having a partner in the deal that's helping add back that time that you can't get back is crucial. Now, what mindset shifts had to happen before your business truly became scalable? Talk to me about your mindset. You've exposed several things that I think a lot of people need to hear. I need to hear it. You know, the further that you grew, the more valuable you recognize that advice was, and having somebody, you know, like that's a whole different, you know, that's a different way than a lot of people think. They think, well, I've arrived, you know? So what kind of mindsets did you hit? What are some major mindsets that you had to shift and come through as you've gotten where you've gotten?
Yeah, we've grown a lot. We've changed along the way a lot. But yes, first, I guess mindset of we want to invest. We want more properties.
Yeah.
Then the mindset of we need help.
That's a shift.
We need help to grow. And realizing along the way also, the more we had, the more properties, the more investments that we had, instead of, oh, I know everything, I'm an expert, nobody knows more than me, realizing that so many people out there know more than we do. Yeah. So the mindset of there is so much value that you can still get from other people. You're never going to be in a position where you know it all. Yeah. Then that you the position where you meet people and know you can't learn anything from them.
Yeah, it's tough. That's tough. And so
if somebody has that mindset, they'll never grow.
It's gonna sink them. So any other major aha moments you had along the way when you figured something out and you were like, oh yes, that's exactly what we need to do? There probably were so many of them that I can't think of one on a spot. But yeah, there were at the times when you're not expecting them, when you're thinking so much about something and trying to figure it out. Usually with me, at least, it's not at that time when I get that breakthrough. It's when I'm doing something else and not even thinking about it. It's like these ideas come to my mind. Just boom.
And then sometimes there's been this one idea that just kept following me, like a different times when I wasn't thinking about it. And at some point I realized maybe this is the solution. This one thought kept coming back to me and I just kept shutting it down. Like, no, this isn't going to work. This is not the solution. And then as I'm, let's say, swimming or walking my dog and totally not thinking about the problem that I'm trying to solve, it comes back to me again. And it might be. I'm now starting to realize that that might be the thing that I need to do.
Yeah. Gotcha. Okay. Yes. So last question. What advice do you have for high net worth professionals 10 years from retirement who are late to the real estate game? What would you say? Like, what's the piece of advice, you know? Because there are a lot. I work with a lot of people like that. They'll call me. I've got 10 years till I'm out of this, or I own a small business and I'm transitioning out, and I need passive income assets. You know, Brandon, what do I do?
I don't think they're ever too late. I don't think they should think that it's too late.
Okay.
I would say, with you and your advising skills and
Yeah.
your credentials, you should be able to explain to them why they're not too late. They probably have certain goals in mind, and if you, with your expertise, can meet their goals,
Absolutely.
they probably aren't too late. It's just, are their goals achievable with the
Yes.
amount of time they have? But I believe that an expert should be able to tell them, yes,
Absolutely.
you can achieve your goals, or
No.
no, you can't, but here is what is doable
Yeah.
for you. Here's what I can do for you.
Absolutely.
Mhm.
All day long. And I cannot agree with you more. Having the right piece of advice at the right time is going to be detrimental to your success. One. Two, if you're a first time investor, I cannot tell you enough that you need to be connected to the right person, because the first investment, if it's not done well, can really mess you up and set you back. It can have a negative impact on you. It might stop you from getting the next property. It can mess your financials up. I mean, like, it's just really, really important that for a first-time investment that you get it right and you have solid information. You got the right person in your ear telling you where to go, what to invest, how it looks, how it's going to play out, because you don't want to get that wrong. And especially if you've got 10 years that until you are transitioning to just a full-time investor, you definitely need the right person giving, because they can take you through 2 or 3 years worth of, maybe 5 years worth of learning curves that you can just avoid altogether. And I don't want you to spend countless hours. Yes, I want you to learn and grow, right? However, you can read 1,000 blogs and watch 1,000 videos, but if you don't have an organizing idea and concept and understand how to apply the things that you're learning, it's just scattered pieces of information. And it's not, yes, it can be true. Yes, it can be factual, but it might not be applicable, or you might not be applying it the right way for your investing. And you really won't know that until you have exchange with another investor and they go, this is not the smart move here. You should apply that like this, or it's the right thing but applied in the wrong way. There's so many ways that you can get it wrong that you really can't do this without a successful partner. You need somebody to help you. So don't be a stranger. Don't be silly. Pick up the phone. Give me a call. Give Gosia a call. Her information is going to be in the video description. My number is 843-360-1737. Can you talk a little bit about your property management company, just so that they understand your services, what you offer, and what they can look forward to when working with you?
Actually, yes, absolutely. So we've started as a short-term rental property management company here in Myrtle Beach. We've been in the market for about 10 years. We manage 120 properties, mostly short-term. However, right now, at this time, we've expanded our services. We can also manage long-term rental properties. We can manage commercial properties if you have any of those, and we can also offer a la carte services. So if you feel like you don't need full service management, but you need certain aspects, you need help with certain aspects of your operation, we might be able to help with that. So feel free to reach out and we will see if we can help you with anything. I do still recommend always 100% full-time management, but sometimes, as we've talked about a lot of those situations today, sometimes it takes time to realize that this is what you need. So if you're resisting, and if you really feel like you want to do it yourself and you need just help in certain areas, we might be able to provide that help until you realize that you just need full-time help.
Guys, we can't say it enough. Absolutely. You certainly can self-manage. It's totally doable with one property or two properties. It is going to start to become a lot when you start hitting 3 properties, 4 properties, 5 properties. And at some point, if you don't have the infrastructure built, it is going to hold you back and you won't be able to handle it anymore. So that's where you need a solid property manager. That's where you need real estate advisory services. That's where you need to start building a network and a team. And either you're going to make that your business, or you're going to bring the right people on that is their business,
Mm-hmm.
so that they can provide those services for you. And
Mm-hmm.
those kinds of partnerships, those kinds of relationships are at their best when they're at intersections and don't run parallel. For example, you might be a plastic surgeon, a dentist, a lawyer, a doctor, a professional, a small business owner. Well, you're an expert at what you do in your field, and maybe you've done that for 20 or 30 years. And you ran a gas station business. I don't know what it is, but the point is you've sold it. Now you've come into cash, and you need to figure out where to put your cash. You need to figure out where to invest. You need to figure out who to trust and who not to trust. It's a big deal. Well, at that point, you can bring on the right kind of partners that can help you basically build wealth. You're an expert in your field. We're an expert in our fields. When we bring those things together, we can make it rain for everybody. It's pretty much that simple and that easy. And those partnerships are in large part how we get to those next chapters in our lives. They are how we get to that next stage in our lives. It's going to be people over income every time that's going to bring you into that next stage. It's just that simple and that easy. It helps lift that lid off you. Well, guys, we've had a blast today. I've certainly learned a lot. I've had a lot of fun.
Mm-hmm.
If you have questions or need anything, I don't care if you're 1 month, 3 years out, whatever. If you're a commercial investor, if you're a short-term vacation rental, long-term investor, I don't care what kind of investing you're interested in. Give me a call. It's 843-360-1737. Gosia Cooke is officially my property manager. Like, she is the one. So if you need to get in contact with her, give me a call or look in the video description. Her information is down there. Anyways, we've had a blast. Thank you for joining us. And until next time,
Thank you.
I get calls and emails every day from investors just like you looking to make their move into the Myrtle Beach market. They want to invest in short-term vacation rental properties. They want to invest in oceanfront condos. They want to know where the best deals are in our market. Well, guys, you're talking to the right person. 843-360-1737. I'm going to help you put your hands on the best deals in our market. If you're a first-time investor or a seasoned investor, if you're 1 year, 6 months, 3 years out, I don't care where you are in the investing process, pick up the phone, give me a call, send me an email, shoot me a text message, and let one of the many stories on our channel be one of your stories.